Hello, my name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy. I'm coming up with a new case study this week that I really like, and I think it's going to keep me in trades longer, and it really kind of cleans up my charts from a 1 minute to a 2 minute. So I've been studying all weekend on this strategy, and I'm going to put it to work tomorrow. So I'm going to go ahead and just kind of talk about a few things right here to show you how easy that we can take the strategy on. So I'm the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. And I am yours truly, Washboardjim. So this is my setup when I'm trading the SPY in the SPX. I usually put it on, I'm going to usually have it on the 5 minute and the 1 minute. This week I'm going to be using the 2 minute trading this stock. Right beside it, I'm going to be using the /ES with the VWAP to keep me in and out of the trade on the 1 minute. So I'm sitting here and I started studying this chart pattern, or this idea. What I have is the 200 SMA, and I have the 10 and the 20 SMA. I'll still be trading my crossovers. I'll still be looking for patterns, and it just seems like things a little bit more cleaner with the 2 minute right now. With this strategy, I took off all my moving averages. I don't have, the only one I have on here that I've used before is the 200 SMA, and I will not live without it. And the way I've been looking at charts with the 10 SMA and the 20 SMA, it's really starting to come to life. I've spent at least 10-15 hours this weekend studying this pattern, these moving averages. So I have the SPX and I have the /ES. I use the /ES with the VWAP when I'm trading the SPX and the SPY. So we had a big old knife Wednesday evening. Let me see if that's Wednesday. Yeah, Wednesday evening into close. Well, on that pullback, we had to break out to above the 200 SMA. So I used the 200 SMA as a support level and also as a resistance level, and I also will be using it as a pivot point. Well, in this 200 SMA, we have what you call an inverse head and shoulders. And I want to draw that in for you right here. There's your left shoulder, your right shoulder, and your right shoulder. And you could come, I guess, if you wanted to, try it like that right there. But it went straight across that way. It lines up with that. Then you have your right shoulder. So as the 10 crosses over the 20, you want to go ahead and buy a put. As long as that stays under the 20, you stay in that put. Once it starts to cross up, that's when you want to get out. So we have the 10 and the 20 right here. So you've got what you call a 10-20 crossover. Right at open, we pulled back to the 200 SMA. So we got that shoulder line. So we have this shoulder line, the left shoulder, the right shoulder, or where it pulled back, that's going to be the head. There's a gap. And then you got the right shoulder right there. So you have a whole new pattern coming down here. As it respectfully respects the day open, which I tried to trade Friday or Thursday and got screwed on, because I like to get on that day open and maybe jump on that trade and run it up, but it didn't work that day. But we got a double bottom off the 200 SMA, off that shoulder line, intraday double bottom, shoulder line of inverse head and shoulders, and we came back, and there goes that 10 again. The exit idea was right here. If you took that trade, and then when we start, until we break the 21, the 20. I'm so used to using the 9 and the 21, and I've got them in the same color, so I'm going to have to break that habit. It takes 28 times to break a habit. So if you can win 28 times, or if you lose, I mean, just if you can get 28 good wins, you broke a bad habit for sure. So we dip down, and that crossover, when that 10 crosses over the 20 SMA, that's time to take the trade and stay in it until it breaks above the 10 again. Then buy calls. Here, after we let out, this is what you call a fallen wedge. So every time I talk about a knife, you got to look for the pattern to take this trade. And if you can count to 3, you can quickly learn to trade with me. So I'm drawing this wedge in. We got the right shoulder, and we got a fallen wedge, and we break out of that, and we bust past that 200, and we take the trade, and we keep in the trade until it breaks below the 10. Then once it starts to break below the 10, you got to make a decision. We got a triple top up here, so I would exit the trade at the triple top, just right there. I wouldn't hesitate. As it started to come down, I would have got out of that trade and then got right back in it, maybe here on another pattern. So that again, the 10 crosses the 21. 3 black crows with a long leg doji hammer, run it back up. So when you have the big gap of the 20 and the 200 SMA, eventually you're going to have a pullback and it's going to tighten up. See how far apart? It's kind of like the Bollinger Bands. So when the 10 comes back down and touches that, or the 20 comes back down and touches that 200, that's a buy signal. That's a buy signal. That's telling you that that's a real strong buy signal. And jump in that trade. Or then you got the negativity again, then you got the crossover again. There's another head and shoulders. So you got your head and shoulders right here. Left shoulder, right shoulder, breaks out a little bit, pulls back, second touch. You got the 10 crossing the 21 to get into this trade right here. As long as you ride that 10 up and that 21, you're still good until you break down below that 21. And that's when you want to exit the trade. So here we go the next day. We've got the same situation. We've got the snake. We've got the inverse head and shoulders. Well, that was, I just did that one. Well, here's another one here. I moved on. Hit that 200, run it on up. That's an inverse head and shoulders right here. And I'm going to be using the /ES, but I like this a lot. I'm going to be using this. This is telling me that we're bearish. This morning, well, we're not bearish. We had a gap up, and we're consolidating right. So it's got to break that previous high or drop down and hit the 200 and see if it holds the 200 and take the trade. That means drop down here and hit the 200 and then go through that same thing we did right here. The crossover, respect that, breaks out, then you take, what is it? These are 2 minutes. So you're in this trade 2, 4, 6, 8. 16 candles, 12 candles. We're in this trade 4, 8, 12 candles. That's it. This is the way the institutional traders trade. We have a crossover, 10 crossing over the 21. You got that 10 coming down and budging up against the 200 SMA. Trade idea. This engulfing candle is telling you what? Telling you that there's more to come. 3 black crows, 3 white soldiers out of the trade. 6 minutes you're out of that trade. SPY. I can't get that up there. I can't get that over there. Let's just pick this day out here. Big old hard sell-off. I mean, this is really going to be a good strategy for anybody to follow. Even a 3-year-old could follow this. So we're under the 10. We're under the 10. We had the crossover right here. You could probably buy a put. As long as you're staying under that 10, you hold on to the put. Once it crosses the 10, you get out. Do you see it? You got the 10 crossing over the 21 right at open. You hit the 200 SMA as resistance. Again, the 200 SMA. Beautiful trade idea. Beautiful trade idea. You got the 10 crossing over the 20, and we punched up against the 200 SMA. And then we created what's called wedge. Little wedge with the head and shoulders. Finally broke out and run up and hit the 200. So that would have been your put trade, and this would have been your scalping trade. You'd had 3 scalps out of that, or at least 2. See how the 10, so you're in there 2, 4, 6, 8, 10. You're in there a good 30 minutes, 27 minutes. More than that, 30 minutes. Then you twist it around with a double bottom. You're under the 9. Once that crosses the 9 and the 21, you jump in the trade. Retest, created an inverse head and shoulders, big breakout to a double top. Come back down for a triple bottom, back up to that channel again. You're watching the 10 and the 21. As long as you're below the 10, you're bearish. When you break the 20 SMA, you're bullish. You got a triple bottom up, pulls back down, so you got your snake. What did that pull down to? Jesus! Oh man, this is tough. Let's get on a bigger chart. There we go. Breakout. You go below the 9, below the 10, bounce right off the 200 for a double bottom, take the trade, run it up to a triple top. You're out of the trade. Another inverse head and shoulders. You're kind of staying up here tied up. Still looking good. You could have had a couple mini scalps maybe. But right off the 200. So you consolidated here. You got to pull back. Another big old snake. I had fun last week. I really did real well. So you're under the 10. You have the crossover, double bottom. Then you got your wedge. A 1, 2, 3. 1, 2, 3. Boom to the 200. We did that one already. So you got bottom here. Whoops. You got a double bottom. You have the crossover. You have a double bottom. I would have took that trade right there with a tweezer bottom. Inverted hammer. Watch them candles. Learn them candles. Learn them candles. 3 black crows. Consolidated. This is consolidation. Breaks out. Past the 20. Up to the 200. You're out of the trade. 3 black crows. Consolidation. There you go again. You broke below the 10. She starts to break above the 10. You got an inverted hammer. You draw that snake out, run it up to the 200. You're out of that trade in 8 to 9 minutes. Comes back and respects the 200. You jump back in on a tweezer bottom. We have the crossover. We have the 10 crossing over the 21, respecting the 200, respecting the 9 all the way up. You're still in the trade. You didn't really break below that 200 much, and you run it up to a triple top, quad top. Body, wick, body, body. It's going to be real easy to keep you in and out of trade. Got your rising wedge. So that's a strategy I'm going to be working on this week. I'm very excited on how this is going to turn out. And I've been trading 22 years, and I've never thought about using just straight SMAs. I've thought about a couple SMAs and more EMAs for faster scalps, but I think this SMA is a slower moving average, and it'll probably keep me in the trade longer. And I'm going to have a sip of some cider. So let's get excited. My name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now.